So very warm welcome to StartX Training, Consultancy and Financial Services. So today a very powerful discussion that we are opening today. It is on protecting the what really matters the most, your life and the income. Many people either they do not have insurance or they have an inadequate coverage without realizing the risk that they carry all through day. So hence today we have joined by an expert. She is a certified financial planner himself, an entrepreneur, a risk management expert. So she will help us to understand and make us simplify entire insurance planning and human life value as well. So welcome, ma'am, on the show, and some interesting discussion that you have come up with for all of us, and welcome to the show, ma'am.
Thanks, Deepak. Thanks for the warm welcome. Okay,
Yeah,
we'll start our discussion. Thank
yeah,
you.
yeah. Thank you so much, ma'am, for being here. And my first question to you is why risk management is very critical for all the earning individuals and not only for wealthy people.
Okay, so to answer this question, first let us know what is risk.
Yeah.
This risk is an event, it can happen to anyone. If you see an individual, what kind of risk it faces, it is disease, disability, and death. This 3D is risk to any individual. So if one earning person whose major asset is its income, it comes through this kind of risk that and family is not prepared for that. It will wipe out whole of their saving. So here risk management is very, very important. So what is the tool for risk management? That is insurance. That is the only thing which can do the risk management. If insurance in its place, it can protect the family from coming out of this hardship. Let us take an example. One person has got some medical emergency and he got admitted to hospital, and bill came out to be 2 lakhs, and insurance company gave all the claims or paid that 2 lakhs amount. Then this family, they do not have to break any investment. They do not have to sell any asset forcibly. So for other goals, for what they have kept their investment, it is intact. So that's
Yes.
why risk management is very, very important, whether he's rich or he's poor.
Absolutely, ma'am. I mean, as you rightly said, that one big incident like health admission in the hospital can wipe out the entire savings. That's how the insurance planning and risk management becomes very, very critical. And regarding this human life value, madam, what I heard is, the insurance planning should be done as per the human life value is what they say. And what exactly human life value is and how does it help in determining the adequate amount of insurance? Can you give your insights into it from a certified financial planner perspective?
Okay. When we see HLV or human life value, that is the value of your future earning capacity. So it estimates how much money your family need if your income has stopped permanently. Okay, let us understand with one example. One person who is 35 years old, he has 2 kids. He is the only earning member of his family. His wife is a housewife, and he has a home loan also. And some mishap happens to him, and he is not in the position to earn now. His income has permanently stopped, but the expense will continue. That the household expense has to be taken care. His kid has to go for education. They have their education, like lifelong education is there. Then loan has to be repaid.
Yes.
So taking care of all these liabilities, household expense, inflation, their long-term goals, we can calculate one amount which will be logical by us, how much insurance should be taken for a person. So calculating this HLV in a scientific method, like calculating the amount in this scientific method, which will replace his income, is called as HLV. That we'll see one example. Okay,
Yeah.
that's what is HLV, and that's how it has to be calculated and given to the person. And it should not be guessed. They should not guess the amount. They should always take one logical amount which will literally replace the income of the person.
Yes, thank you, ma'am. I think you have, very scientifically, you have, given us the insights into what is the human life value and why it is important to calculate human life value. And, ma'am, one more thing is, Sushmita, ma'am, one more
Yes.
thing is, what are the common mistakes that people make while buying insurance per se?
So according to me, the most common mistake when they take insurance is they mix up investment with insurance. That I don't support actually. That normal mixing insurance. Insurance is protection and investment is for investment, and they mix up investment and insurance. Insurance should be purely for protection. Like it should be for your medical expense, or if the person is not there, it should be replaced for its income. Okay. And second mistake, what I see is people often take a very low cover and just to save the premium, and so they are underinsured.
Yes.
Their insurance amount is low. Another thing is they literally delay taking the insurance, like,
Yes.
and later on they have to pay a higher premium.
Higher time.
And when they are in the proper condition, insurance company gives them insurance. But when they are diseased or they have some deficiency, insurance company won't cover them. Other thing what we have seen is medical insurance. They don't disclose all their whatever the disability, whatever the details they hide, and so their claim amount will not like claim amount goes for a rejection. That is one more thing we see. And some people, even we have seen, they just try taking the corporate medical cover and they manage with that. So these are the some of the like mistakes they do. I just
Yes.
like to add one point. Whenever they are taking insurance, they should read it carefully. Just to save premium, they should not take one insurance where there are lots of disclaimers are there, and they don't read it properly. Just they take that insurance, and later they find there are mistakes. Thank you.
Yeah, so rightly, I mean, as you said, the biggest takeaway for me is as we keep delaying it, I mean, it will keep on becoming very expensive, and later on, we might come into a situation wherein it might be very difficult to get an insurance cover also because of the
Yes.
diseases. People, I mean, when I need it, insurance company may not give also at that point of time. So
Yes.
your recommendation is start as earlier as possible. Uh,
Yes.
that's
You
a
should.
very good pickup that I could pick it up from your side.
It
And
should cover the risk as early as possible.
yes, ma'am. And how can someone check if their current insurance cover, whatever they have, is adequate enough? So, what is any calculators are there or any ways that I can check whether my current insurance is adequate or no? So, your insights
They
will
can
be.
just start with a simple gap check, and they should consider that at least 10 to 20 times of the life expense is covered, and plus whatever their loan outstanding and future goals. If everything is covered in that amount, then it is adequate insurance. Otherwise, what happens if the insurance amount is low? then it will force you to break some savings, and which will impact the overall financial condition. Second thing is that when they are taking any medical insurance, they think that if they are getting admitted to hospital, that cover should be enough for them to cover whatever the medical expenses come, not to break their savings, or just the part of that is covered. So according to me, that is the logical way of taking the insurance.
Okay, and ma'am, what is the financial implication on the
Can
families? Yeah,
can we see one example?
yeah,
Just to,
that will be great, ma'am.
okay, let us see one example where we can. Okay, can I present this?
Yeah, your screen is visible.
Okay, so here I have taken example of a person who is 35 years old. His name is Rajkumar. This is just a hypothetical name I've taken. And his yearly income is 25 lakhs.
Yes,
And he's just 35 years work, 35 years old. So he can work up to another 25 years, up to
yes,
60, and that will be another 25 years. And
yes,
every year he's increasing his salary growth by 5%.
yes,
And this is what, if he's able to earn for 35 years, earning this 25 lakhs per annum, he would have earned 5 lakh 90,071 359, or I'll tell that is 5 crore 90 lakh 71 349 rupees he would have earned. If your insurance cover is this much, 5 crore 90 lakh 71,000, then you have adequate insurance. It will, for your family to run for 30, next 25 years, it will be sufficient. And all the goals will be taken care here, all household expense as well as every, whatever you have, medical expense, everything will be taken care in this.
yeah, madam, it's a very great, the great amount of insights that is coming out from this calculation is, for me, the biggest takeaway is now, in case if there is a death happens, 5 crore 90 lakhs 71,349 rupees will go to the nominee, and that they will keep it in the bank, and with the risk-free return of assuming a 5.5% or a 5% kind of a return, and the family will keep withdrawing the same amount of money as he was alive. 25 lakh rupees per annum, he will the family will keep on withdrawing, and this income will come for the next 25 years. So
Okay.
what
Yeah.
it really,
That's,
yeah, what it really means is the entire income which is getting replaced over here.
yes.
Yes,
Correct.
wonderful.
Correct. So this,
Yeah,
we can take example as adequate insurance cover.
yes, madam. And this you say that it is one of the way that we can calculate human life value as well, and we can check whether the current insurance cover is adequate or no. That itself, with this calculation, we can check that also as well.
Yes, this is calculated using human life value method. Thank
Yeah. So great one, ma'am. And lastly, in case if there is no adequate insurance cover for the family, what could be the financial consequences that will be faced by the families? I
you.
mean, without any proper
Yes.
protection, what would be the
Yes. So
situation
what
there?
will happen if there will any mishap happens? There will be, the income will stop, but the expense has to go on. Expense will not stop if that person is not there. Family expense has to be there.
Yes.
But if they are not prepared for that mishap, what will happen? They have to break their savings first. They have to sell their assets, and also they will go into debt. They will be into.
Yes.
different kind of loans, and children education will get delayed. And first of all, they are emotionally disturbed,
Yes.
and financial unpreparedness will take them into a different, very, very bad situation.
Yes.
So it is better to be financially prepared. Anything can happen to anyone. So if they're financially prepared, at least they can face that problem. That is what
Yeah.
I can tell about this.
Yeah, absolutely, ma'am. I mean, not having adequate insurance cover, what I see from your discussion is that is, more painful for the self also and for the family also. So, not having an adequate insurance cover is not an optional. It is a must for everybody. Uh, is that
Yes.
what you are
It,
saying, ma'am?
yes, that is very like is a very serious issue, has to be always taken care.
Yeah. So thank you so much, Shushmita madam. It was a wonderful discussion with you today. So I could also get a larger perspective on how to arrive at a adequate amount of insurance cover which is required. Now for all of us audience who are listening to us, we have a different way of calculating human life value, and Sushmita ma'am is an expert, and she is a certified financial planner himself. And if you want more details regarding this, and if you want to check whether your personal risk management or a risk assessment is to be done, you can always feel free to get connected with us. The details are in the description box, and we will be more than happy to assist you and help you to have an adequate insurance cover and live the life very peacefully without having to worry about your loved ones. So thank you so much, ma'am. Any last words from your side?
So we'll always be there to help people, where instead of guessing just the insurance amount and being underinsured, please come to us. We'll calculate how much insurance is required and we'll do according to that. You can take your conscious decision according to that. Thank you.
Thank you so much, ma'am. So looking forward for many more sessions from you, ma'am. And you being a certified financial planner, I look forward for your other aspect as well, retirement planning and other aspects also. Thank you so much, ma'am. It was a
Thank you. Thank you.
wonderful discussion with you. Thank you so much, ma'am.
Thank you.
Thank you.